But a morning to you folks, all my 6 million viewers out there. Today is Wednesday. It's hump day. Woo, woo, woo. We are coming from you live from Florida today. So without further ado, let's figure out what's going on in the markets today. Today we're focusing on the jobs numbers. So remember Federal Chairman Powell came out last year and said, we're going to inflict pain to those out there and housing and the jobs market. Well, they kind of hammered the heck out of the housing market, and now it's coming down to the employment numbers. And this is all signaling a recession, unfortunately, is very near. So let's get over all the data that we're showing here on the boards. So this is what you see on my screens. If you're sitting in my office, we have these screens going on and a whole bunch of other things going on. But let me just explain why I got these in front of you. So I'm a mortgage advisor. I do this on a daily basis. I really stay focused on the bond market because I really want to see the direction of mortgage rates. That's the only really thing I can kind of see and track. Housing's really too difficult. It's basically regional. It goes down to the micro spot, basically what city you live in. So watch a lot of the pundits out there that say, the housing market's crashing. Look at San Francisco or San Diego, and they pick out the two biggest areas of the whole country that's crashing because this is all local. What is your market's doing? And I'm going to show you what my local market's doing here in Florida. So without further ado, let's get to the headlines. We got ADP payroll numbers came in and they're dismal, but I really don't pay that much attention to the ADP numbers because they're really bad at doing this. You would think they do payroll for, basically half the country. They would know the employment numbers, but they really get this bad. And the trade deficit just is skyrocketing. The federal government right now is spending way too much money on way too much give outs, and they got to stop eventually, guys. You can't just keep giving free money out and expecting things to just work out. That causes inflation, if you guys don't understand that part of the economics. So without further ado, let's get over to this. We see the bond market, the 10-year treasury, nothing. It's up in here. You can't see that because I got a green screen, but it is down 3 ticks. So it's down 3/100ths, not losing any sleep over that. And then you go to the MBS market and they're flat as well. So what's going on in the economy right now? Well, let's get to the headlines. We got the manufacturing numbers came in and they came in a little light on Monday. Then Tuesday, the JOLT index. Now this is really shocking. And this is kind of coming into play where we think the recession, or we pretty much know a recession is coming. All these factors are showing us that this is going on. So let's look at the numbers or some of the areas that you focus in on when you're trying to figure out, is there a recession coming? One is the jobs market, and the next is the yield curve. And I'm going to go over both of those this morning with you. The JOLT index says, well, just a couple months ago, there were 11 million job openings, 11 million. Okay, now there's 9.9. It might not seem like much, but there's over 1 million jobs that just got sucked out of the market. So employers are starting to say, okay, a recession's coming. We get it. Our sales are going to go down, so we don't need as many people. So we're not going to even look for more people. So we're going to have job openings getting sucked out of the market. And now today we got the ADP payroll numbers. Like I said, I really don't pay a ton of weight on this, but look where they are. The previous reading was 261,000 people got new jobs during that period. They expected it to decline all the way to 200,000. It declined all the way down to 145,000. So things are moving fast, folks, right through here. Then the manufacturing numbers, we got this basically on Monday, and it's a revised number, but we're not going to really pay that much attention there. And then crude oil inventories, this is going to basically tell us, part of where the oil is, so then I can get a gauge on what the numbers are going to look like for the prices of gas and so forth, because that's a huge part of the inflation numbers. Okay, and then tomorrow we have initial jobless claims. That, with the ADP numbers, I'm really going to start focusing in on and see what my thoughts are there. And then Friday we got the markets are closed, but we will have non-farm payroll numbers and the unemployment rate. So you can see the rest of the week is just jobs, jobs, jobs. Let's get over to the headline news, and it is stocks are trying to cancel the recession. Wall Street isn't sure of that because the markets, based on some of the numbers today, aren't liking some of these things. The futures indexes right now on the S&P, the Dow Jones, the Nasdaq, and the Russell are all down. You can see ADP private employments fell far short than expected. It's starting, folks. So let's get over to one of the areas that we want to focus in on. Another piece of this puzzle, because people say, what really defines a recession? Well, previous recessions were defined one thing of a inverted yield curve, and that's what you're seeing on your screen right now. Inverted yield curve is basically what this is. Okay, so when short-term rates, what you're seeing right here, are higher than long-term rates. You can see down through here. So this curve should be this way, going from bottom left up, okay? But it's actually going the opposite way. So that's a yield curve. And then the next piece of the puzzle, like I said, is going to be the jobs market. And the jobs market are starting to take a toll now. But we do have the Federal Reserve, one person from there, Cleveland's Fed's Mester. She runs the Cleveland Fed. Inflation's still too high. Well, give it a little bit of chance. Well, at least give it a chance for the recession to hit in. Okay, folks? All right, so how much does mortgage rates usually drop during a recession? Well, the last 5 recessions, we saw an average of 1.8%. So there is a silver lining behind this, as long as you keep your job and as long as you don't get majorly financially affected by the recession. So one area that I want to go through is, I was looking at some condos around the area that I live down here, and this was intriguing. Remember, everybody keeps saying the markets are plummeting, the markets are plummeting. So what do we do about this? Well, let me just show you a little bit of a little graph here of this particular condo. And this was a trend that I saw kind of all over the place yesterday when I was looking at some things. Here's where the market is right now for this particular condo, and it was condos all over the area where I am. Look where the prices are right now. $599, 600,000. Where were they? Okay, remember people kept saying, well, we're going to have that crash. That crash is coming. The crash is coming. Okay, so here's what this price of this condo has done over the past, let's say 2 years. Let's go all the way back to here. Okay, so remember when everybody kept saying, the world's ending, folks. The world's ending, back in, like, say, January 2021, where this condo right here was $390. Okay, then it went all the way up to here, June of 2022. When we thought the market peaked at $550, it had a little reprieve down to $530, $512. Okay, so that's, a 10, 11, 12% little drop there. Now look where it is. Okay, so what's going on, folks? Okay, so the markets aren't crashing either here, even at desirable places of like this on the beach. Okay, so that's one of those areas where, where is the markets going? Well, a lot of my pundits are saying the world is crashing and the sky's falling. I don't see it yet, guys. Okay, so the next thing is, why are you here? Well, let's go over to mortgage rates. Let's see where the MBS market is taking us. So what you're seeing on your screen, guys, right now is just all the simplest things behind this is what's going on to the price of a mortgage-backed security. Mortgage-backed security is the bond that trades on Wall Street that determines, or it's the biggest factor when it comes to your mortgage rate. Okay, the yield on this thing moves over to your mortgage rate, and that's the biggest part of your mortgage rate. So what happens here is, if this number, the price of the bond, goes down, we're applauding. That means rates are going up. Well, no, we're not applauding. So you might think, okay, so if the price is going up, rates are coming down. My bad. That's why I was applauding. So we like when this number goes up. You don't really see much of that in this chart through here, but it is stabilizing. Where are mortgage rates right now? Well, here's where they are according to Mortgage News Daily. So what are you seeing on your screen of the top 6 products people use? They're out there when they're looking to buy or refinance their home. This is the average that Mortgage News Daily puts out, or they publish every day. So if you want this, to get this alert, just click down below. There's a link down to get Mortgage News Daily delivered to you on a daily basis. But if you want this and a whole bunch more like commentary like this and so much other things, subscribe to my newsletter down below. I don't sell the data. It's free. Just use it for your information to educate yourself. So what this is Mortgage News Daily surveys mortgage lenders all over the country, and they say this: if you had a borrower looking to buy a primary home with a 740 credit score with 20% down, what would your rate be? What would your rate be? So here's where they are. So that's probably not you. You might not be putting down as much money. You might not have that credit score. You might not be buying a single family home or so forth. But if you are, that's probably pretty close to where your rate's going to be. But if your rate isn't that, like that, please don't fret, because all I want you to do is get a hold of us. What we're going to do is we're going to scan the whole country for you guys. We do this service. So here's what we do for you. If you're looking to buy your first house, come to us. What we can do is help you get pre-approved. We're going to scan your loan loan to over 90 of the country's largest banks, mortgage companies, and so forth, and make sure you're getting in the right program, you're getting the best rate in town. Then if you need help with a realtor, we have a system that we can also vet a realtor for you, so you're matched up with somebody that you have basically the same fundamental beliefs in, and basically we want somebody solid in that area for working for you guys, because this is probably going to be your biggest investment of your whole life. Make sure you know what you're getting into. So these are just some of the services that we offer to you. So my name is Dan Free. I do this every day. If you find entertainment and educational value in this, all I ask you to do is give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. Thanks for watching, guys. I'll see you tomorrow with some updates and let you guys know what's going on in the markets. Take care. Bye-bye.